Hi everybody. This is David Skarika. So I'm doing my stock chart of the day here. And this is for Thursday. I'm doing this on the Wednesday, but it's no big deal because as you'll see, this is not a time sensitive matter. So what we're going to look at is China. China is really interesting right now. I'll probably do a more detailed thing because China, I think, could be going through what Japan went through in the early 90s, believe it or not. I know we still see China as this fast growing economy. Obviously, China has not accumulated the standard of living that Japan did in the 90s, and people thought at that time Japan was going to surpass US and all this sort of thing. Well, people think China's going to surpass, but in terms of individual standards of living and individual incomes, but that, of course, that never happened. And then Japan has been in this 30-year malaise. And one reason that Japan went into that malaise is because basically Japan, does not have good demographics and got old before they could get even richer. And China has terrible demographics because of the one child per family. India's surpassed them as the most populated country in the world. India's population is going to continue to grow in their demographics. So they have a very young population. China does not. So China recently too, as well, has been just doing these asset bubbles as a way to keep bailing out the economy, because the export and that sort of thing has kind of peaked. Now they have gone into higher end things. Huawei now makes really, and Alcatel make like good phones and routers, not just the cheap stuff anymore. China's a leading producer of EVs, and of course, with the EVs being shoved down our throat, we're going to see more and more car exports from China. I think China's actually surpassed Germany as the largest car exporter in the world. But what's interesting is, China still makes a lot of the stuff. I bought a few things from Walmart here in Canada, and I, because of my issues and feelings about China, I try to stray away from stuff made in China. I'd much rather, if it's made in Pakistan or India or Bangladesh or Nicaragua or wherever, Turkey, etc. I really don't care. It's like China's in one place because of or what they're doing geopolitically. I try to stay away with it. I don't want to get you into that. Maybe some of you are, not so much into that sort of thing. But if I've, there's so many things still made in China. It's like whatever. Sometimes I got a great backpack that's a cooler. I was here in Canada, perfect for the Bahamas. It was made in China. I got it from Walmart. What can you do, right? So, but you can see that China said exports fell by 14% in July, and this is with EV electric vehicle exports exploding, right? And they dropped by 12% in US dollar terms. And then you can see that exports to the US plunged by 23%, and European Union 20%. Now, a lot of companies are getting away from China. India's making more iPhones Apple's making more iPhones in India. And I think that's part of it. As well, you see China's imports from Russia fell, but actually, if you look at the decrease in oil prices, actually, if you take into the amount that oil prices declined, actually their imports probably, the amount of oil went up, right? But anyhow, this is the exports here, and I think part of this is probably due to that. People like, and China does not have that low cost of production advantage anymore. Actually, a lot of places like Pakistan, Bangladesh, etc., have lower labor costs, and that was part of the problem when China's standard of living was increasing. So that's part of it, but this mainly has to do probably with probably with the slowing economy and the Chinese economy. You see their crude imports dropped by 20%, and their integrated circuits fell by 17%. Now, how much is black market oil coming from Russia on them, leading to that? That's probably playing a factor, right? Because they're getting probably sweetheart deals on oil from Russia due to sanctions, from the West. But it probably is also a sign of a slowing economy. And I think the problem with China is they went to the well too many times, creating too many of these asset bubbles. And we can see the XFXI, which is the Chinese ETF, since all markets peaked in 2021, it actually peaked before most markets, as most markets peaked in late 2021. But you can see this is down, over 40%, actually nearly 50% from its high. And the Chinese market has really, really lagged. The Hang Seng, Hong Kong is obviously very closely knit to the Chinese economy. The Hang Seng is at 19,000, hasn't done anything for years, we're going to get a 10-year chart and then go even further out, you can see, other than this spike low late last year, the Hang Seng is essentially, at 7-year lows back to the 2016 level. Well below the 2020 COVID lows, and obviously Hong Kong is losing ground as a financial capital because of the issues with China. You can see that the Hang Seng is hanging around the 2016 and 2011 lows, right? So you can see how far it is. Actually, if you go back all the way through this, the Hang Seng is basically back at 2006 levels. Like that would be like the Dow being like, 15,000, like the S&P being like 14 or 1500. And we all know that the Dow and S&P are double and triple that. So that just shows you how, how much laggard this is longer term. And I think this is a longer term trend. And I think the demographics aren't even part of it. I think because of COVID, there's going to be less direct investment in China, because I think, the Chinese government, which is no governments are trustworthy, but especially the Chinese government now becomes even less trustworthy. And then the Hang Seng, showing, Hong Kong kind of losing, its influence as a financial center. And then, like I said, China's demographics longer term are poor. And then because, again, they've just created like these bubbles as a way to get these recoveries and booms, rather than really creating their own internal demand domestically, like organically. I think that really hurts China. So anyhow, our stock chart of the day is really, we're talking about the Chinese exports declining over 20% to both Europe and the United States, and kind of the lagging of the Chinese markets. Like, we'll quickly look, last chart here of, this, you can see since this kind of blow off, this is when China really did this huge stimulus, post the financial crisis. You can see the Hang Seng went from 22,000, or the Shanghai index went from 2,000 to over 5,000, and then really has been in this range, over, an 8-year period between about 2,500 on the upside and 3,500 or 3,750 on the upside, and 2,500 on the downside. And again, if we go look at what the S&P has done since that time frame, you can see the S&P in 2015 was just over 2,000 and has doubled. So the Chinese market has really lagged badly. And I think this lack of organic growth, even more so than the bad demographics, is playing a role. So we're going to leave it at that. And I hope you enjoyed today's stock chart of the day. Tomorrow, we're going to have another interesting one. It's going to have to do with interest rates and housing.